All right, let's make sure we have some audio. All right, we should have some audio now. Yep, we do. Okay, excellent. So we're going to do a little pre-market scan here, and I'm going to take you through the different sites that I use for the morning. All right. So again, tomorrow, what I'll do is make sure the mic is working. I think it is now. And also we'll do a little screen share. All right. So first of all, there are 6 different things that I'm going to look for in the morning, and I'm always keeping notes. I highly recommend that if you guys are going to, even if you're day trading, have the levels and the events that you're going to be watching for. It could be earnings or anything on a piece of paper. And here's why. I don't recommend typing it out, even though I do use a service called Workflowy. Make sure you use good old-fashioned pen and paper in the morning. And the reason for that is when you write something down, it's amazing how you're going to remember it better. So even if you don't glance down back at your notes or something, there's going to be something that sort of jars your memory. So there's 2 things that I'll do first thing in the morning. I'll look at the different data points and the trends for those data points. You can do that really simply on sites like Forex Factory or Trading Economics. I'll use both of them, okay? I would also look for trends in the individual sectors. Now, when we go live with a screen share, which I'll probably give a whirl, I'll do that tomorrow. I'll use a site, and these are all free, okay? I'll use something called Koyfin to do that, Koyfin. And there's a really cool little feature within Koyfin that lets you watch all the different sectors and the way that they're interacting with each other. And it gives you longer term trends. So Koyfin, Koyfin, big fan of that. Absolutely free, amazing service. Okay, so some people actually think that Koyfin's a bit of almost like a Bloomberg terminal type replacement. I wouldn't go that far. I've done both, but I think Koyfin's fantastic. All right, so I've got my data points covered. I've got then the trends in the different sectors. I'm an active ETF trader, and I think that if you are a futures trader, you're going to love trading ETFs alongside your futures trades, because if you think about what's inside the S&P or the NASDAQ, and I'm taking a look at those here right now, and I'm going to again share the video with you all tomorrow. But partly what I'm going to do is I'm going to take a look at the NASDAQ. Of course, the heavily weighted stocks within the NASDAQ, and this would apply to the QQQ as well. And then I'm going to go take a look at the XLK, the XLC, the XLY, those top 3 heavily weighted sectors within the NAS. And oftentimes you're going to notice there's a relative performance in those sectors that may not be as apparent in the broader average. And then if you are a stock picker, this is the best way to look at correlated stock picks. Maybe sometime in the future, we'll have a discussion about uncorrelated stock picks and stocks that are somehow living apart from this massive passive investing universe that we're in right now, which makes ETF trading and even day trading so powerful. But make sure you're thinking about sort of the connectivity of your markets. If you do that, it's going to make life and watch list building much more seamless. So I've got my data points. I want to see the trends in the data points. And then I'm going to do a quick scan of the macro. Now, how are we on time? All right, so I'm going to go into a quick little, since this is sort of our foundation pre-market show, what is macro? So I imagine there's a lot of different definitions, but if you ask Google, who doesn't? If you ask Google, they're going to give you basically 4 things, and they're going to talk about monetary policy, they're going to talk about interest rates, growth, and inflation. Those are the 4 pillars of macro. Almost everything else will fall below that. In other words, you can look at those, the 4 main buckets, and almost everything else, including news and headlines, can fall within one of those 4 buckets. So those are the 4 pillars of macroeconomics. So I want to know what economic events are most likely to fall within those buckets on any given day. So let's do this. I'm going to head on over to Forex Factory. And today we have Let's see if we have anything. I know we have ISM today, non-manufacturing purchasing managers index. I'd put that under, say, the growth bucket. I'd put that in the growth bucket, but it's something I'm going to keep an eye on. As an active currency futures trader, and you can trade currency ETFs as well, I know that this evening around 11:30, we have the Reserve Bank of Australia. So if I do want to play the Australian dollar futures, if I want to play the EWA ETF of Australia, if I want to play the Aussie versus US or the Aussie currency versus something else, I know that I've got this event coming up at 11:30. So these are things from an event standpoint you really want to keep an eye on. And this is just, it's not just a checklist, it's routine. It's going to anchor you in the morning, as well will your coffee, but it's going to anchor you in the morning, and you're not going to feel like you're dancing backwards when the market opens. You're going to have a really good plan of attack because you know what's coming your way. And remember this, a lot of the events that are on the calendar are going to dictate where your attention should be if you want to trade those particular markets, or if you don't want to deal with the volatility where you don't want to be on any given day. So again, we've got our data points, the trends within those data points. So for example, what does that mean? Well, I'll open up, and you can do this on both Trading Economics and on Forex Factory. You can open up a graph, and it'll be really cool when I can show you all this and we dual broadcast my screen. Oh, by the way, welcome to my office. This was very much a very last minute decision to go live. I thought, hey, why not? Maybe I drank too much coffee, but I thought, this might be a cool thing to start doing. But yeah, welcome to my office. And one of the things that I believe that you definitely want to have in your preparation, again, is, clearly shut the world out if at all possible. But again, this process is going to have you much better. And I'll do a, I'll go ahead and do a summary of the sites and the 6 things that I look for in the morning in the comments below. I'll pin a comment, and that way you guys know the different sites that I'm referring to. So head on over to, say, Forex Factory or Trading Economics and look at the trend of the non-manufacturing PMI. Now, I think the manufacturing PMI is a much more important number. So while I'll watch this one, it is a high impact, but look at the trends. 3 releases ago, it was printing under 50. When you're looking at any PMI, that 50 level is going to be pretty important. It's a line in the sand psychologically, and anything under 50 is perceived to be pretty calamitous. So keep that in mind. Calamitous data, by the way, in this current environment typically suggests that the Federal Reserve is going to have to act. So don't be surprised when bad news is good for the market. And a lot of you have seen that at play the last few months. Okay, so next, we move on from data points and the trends. I take a look at the macro trends in the market. Rate of change is the way I look at macro. In other words, any of those 4 pillars, what's their direction? What's their trend? Rate of change. The events, the economic calendar, ISM, non-manufacturing. All right, now we're going to get to price. So data, macro, events. Now we get to the 4th point, which is the price levels. So I want on a piece of paper, first thing in the morning, what the 4 p.m. closing prices are. So today's Monday. I'll be looking at Friday's 4 p.m. closing prices. And you want to know what the 4 p.m. cash close is, because that's going to be one of 2 levels that will determine the psychology and the potential impact of the gap. All right. So closing price for the previous session. And by the way, everything I'm talking about today and what I typically do in the morning is very related to stocks, the stock indices, and ETFs. All right. Not bonds, crude, gold. The process won't be that dissimilar, but what we're specifically talking about here is preparing for basically stock-related markets. And that includes the futures and the micros and the options. All those choices, by the way, gang, I don't trade options in a way that's far different than my futures. I don't trade minis any different than I do micros. Those are asset class decisions that I will make from a risk control standpoint. I may choose at more aggressive levels in a future setup to go with a mini or a micro if I want to control size and limit my exposure. I might go with options on the futures contract or options on the ETF alternative. So keep that in mind. I think a lot of folks think, oh, my micro trading has got to be different than my mini trading, and my options trading has got to be different than my futures trading. Not really. Not really when you think about the technical analysis and the price action that precedes your entry, right? Your setup. Okay, so closing prices. 4 p.m., not 4:15. I get that question a lot. 4 p.m. cash close. You also want to take a look at your regular trading hour, the RTH, 9:30 to 4. That's your regular trading hour. What was the high and what was the low in the markets that you want to watch? Because when we get a gap, when we get any kind of gap, I'm not only looking at the gap between the closing price, but I'm also looking to see if we opened beyond the high or low of the previous session. Again, cash session. So have those highs and lows ready. And by the way, what is this? It's really kind of simple homework where you're going to go back and look at the previous session, look at the close, look at the high, look at the low, and jot those numbers down. I would do this for the indices that you trade, the ETFs that you trade, as well as the individual stocks. Okay. Next is going to move on to patterns, actual patterns. Now, I'm not talking about doing a bunch of candlestick pattern analysis. I'm looking at really two different patterns, mostly inside days and minor lows and highs. So I'll look to see on the daily time frame, which markets are plotting those patterns. And that takes me through the first 5 points that I'm going to have written down on my notepad in the morning. The last thing, the 6th point, happens at about, what time is it? 9:13. Okay, so in about 17 minutes, bell's going to ring, and I'm going to basically, at 9:30, even a few minutes before is fine, I'll do my 6th point, the 6th thing that I want to have ready. And this is a little bit more specific to indicators that I've developed. One is going to be a volume indicator, and the other is going to be a volatility indicator. So some of you might be familiar with those if you've been following the different content here on this channel. We have something called a V score, V profile, which is volume profile, and also an anchored volume weighted average price. Where am I in relation to different volume levels? And that's going to be at the open. And I will study that the first 30 minutes of the day. The first 30 minutes of the day, by the way, gang, is otherwise known as the opening or clearing range. So I'll take a look at the volume behavior when the participation comes into the market, when the volume comes into the market. I'll take a look at that volume behavior based on V score, V profile, and the anchored, really important, time anchored volume weighted average price. Now, in terms of what time frame I'll do that on, all that will be on a 1-minute chart. I am also aware of 2 other anchored volume weighted average prices on a daily. Usually I'll anchor one to the first of the month, and then I'll have another rolling anchored VWAP that I'll look at to see a little bit more nuanced behavior of the price and volume behavior. So a rolling VWAP that'll exist in the middle of the month, but certainly have a VWAP that's anchored to the first of the month. Today's the 5th of October. So I don't roll my fresh monthly anchors on the first of the month. I'll actually roll them about 3 to 5 days into the new month. So today is when I will re-anchor the dates on all my volume tools. So today is the day I re-anchor, and I'll start to look at the first few days of October and the way volume has behaved so far in this month. But I won't do that on October 1. We'll talk about volume sometime in the future, I'm sure. Okay, so again, the sixth point is kind of like an A-B. A is volume, B is volatility. So volatility is basically historical volatility, historical price movement ranges. And here on this channel, you'll see there's a couple videos that I have done on, you'll see it's called HPMR. So you can catch up those HPMR. One, I believe, is a workshop. The other one is an explainer of the tool that I created using historical volatility data from AutoChartist. So I took that AutoChartist data, I plugged it into a simple little arithmetic formula, my very own algo, and we run this volatility tool throughout the day, which studies the typical price movement range broken down by hour of day. So I'm studying the volume and I'm studying the volatility, and that really rounds out point number 6. So those are the 6 things that I need ready every single morning. Now, that might sound like a lot, but it's really not. You're looking at a few data points. What economic events are coming out and what's the trend of those data points. Again, you can use the economic calendar at Forex Factory or even Trading Economics to do that. I'm going to take a quick look at macro. That's a little bit more involved, but if you keep it segmented to monetary policy, interest rates, inflation, GDP, you can throw money supply in there, the M2 money supply and the trend of that. You can throw the Federal Reserve's balance sheet trajectory on that. But that's the macro look. Then we move on to the price action, the actual prices that you want to have jotted down: closing price, regular trading hour, high and lows. And then we're going to move on to patterns, minor highs and lows, inside days. That's on the daily time frame that I'll look at that. And then finally at just about 9:30, and I'll do that as we wrap up our time here today. Indicator readings. These are really indicators. Volatility. Where are we in terms of the historical volatility? When I say historical, I go back 6 months. This isn't a 14 or 21 day average true range, gang. This is, instead of ATR, what I use is something called PMR, price movement ranges, with a 6-month historical look at the behavior of the market. It's not meant to be twitchy. It's not meant to over adjust because there was volatility last Tuesday. It's meant to sort of absorb Tuesday's action and work it into a larger probability of what we typically see. So there is a place for ATR, but in terms of historical volatility, it's not. You can use them both. One doesn't really prohibit the use of the other, but having a range type look at the market, especially historically, very important. So volume, volatility, and that rounds out my 6 points, and that rounds out our very first pre-market. And again, I thought I'd have a quick sort of foundation for what it is I do every morning, and these are the kinds of things that I will have written to paper and have ready at the open. So I hope this helps. I hope this is something that you can work into your daily practice, and you'll find that when you have this data ready to go, you're going to feel you're ready for the game. You've warmed up, right? You studied your game plan and you're ready to go. My stock traders, I would recommend in your event, the third point, the event part of the analysis, use a site called Estimize. Use a site called Estimize. And Estimize is going to allow you to track the individual stocks that you might have on your watch list and see where they are in relation to their earnings. Because remember, we're talking about stock-oriented trading here. Stock indices, the futures, the ETFs, and the individual stocks that are heavily weighted within those two. ETFs are amazing. Definitely work ETF, especially from a day trading or even end of day standpoint. They're amazing to take advantage of, and they're going to give you better watch lists when you understand relative performance. So one thing you can do on the third point, if you are a little bit more a stock trader, is work in the Estimize, ESTIMIZE.com. And Estimize will allow you to pick the stocks that you follow, and it'll keep a list, almost like a log, on the left margin of the site. And you can see how many days to earnings for those stocks. And of course, runs into earnings become really powerful ways to trade the market. And then, of course, when the earnings come out, just like any high impact data event, that too is going to impact volatility, which of course, in the 6th point, you're already studying. So you can see how they all feed each other and how prepared you are when you've got these 6 points ready to go. All right. And this is going to help intraday and end of day traders. My list is no different for my daily time frame trading on, say, ETF options than it is for my 1 minute trading on the S&P futures, micro or mini. Okay. So that's our very first episode. This was fun. I like this. And I'll see you, tomorrow. And tomorrow, hopefully we can do a little bit of a screen share while we do the camera. All right, gang, leave your feedback, leave your comments for any requests. Thanks for your time. And I'll see you in our next update. All right. Be good to each other.